What's up, guys? It's Pac. Welcome to another market review of May 9th, 2024. Again, guys, we're doing this every single day of the month of May. Go ahead, hit that like and subscribe button. Let's get right into it. So, here we have price moved back to the opening of May 9th, 2024. And you can clearly see that price is bullish on the 1 minute here. We have just tapped 30% of a previous unmitigated zone, which was here from the day before. And we have a completely unmitigated zone here down below what it looks like to be a news candle here. So on open, what I was telling everybody was I was expecting price, since we tapped from the 30, I was expecting price to at least dig down here and then possibly, maybe enter a state of range, but just to see what happened there. That was kind of my thought process on open. And then we just move from there, of course. So right on open, let's get this out of the way. We get a push up, and we instantly get a push down, and it looks like it's going to dig down to that zone. Now, again, are we blindly longing this zone when price had just shifted bearish, right? On the 1 minute, price had just shifted bearish. Are we blindly longing this zone? No, we need something to occur first, right? We need something to occur first. Now, if we look at all of our zones here, this one here, I believe there's one there, it's mitigated, okay? So if price decides, hey, I'm just going to step down, it's going to run that low, and it would eventually run that low. Why? Because this one is already mitigated. Now, you do have a previous zone that I can see here that hasn't been mitigated by 50%. So if price decides to run this zone here, if we don't get anything to show us, hey, price is going up, then you can expect it to bounce somewhere underneath these lows. Why would you expect these lows? Because they're, first off, they're non-structural. Second off, they're right above the point where we always expect the first bounce to come from, which is we always anticipate 50 until it gives us the 30, and then after the 30, we anticipate 70. So as price is moving, you get a little bounce here. Everyone see that? Got that little bounce at your SNDR right there, right? Pretty clean little 50% tap there. Fails to put in a new high, and we just start running. There's no valid structure in here, right? There's no valid structure here. You can see that we just disregard the zone completely. We get a little bounce at the SNDR. It tries its best. Give you a little bounce here at the origin. It tries its best, and then just run straight through it. Now, what did we say? We said, hey, this is going to get ran because this zone is already mitigated and that this is liquidity right above the 50%, right? So boom, it gets ran. You shouldn't even be longing down here. You should wait till what? We should be waiting till at least price shows us something. It shows us something that it wants to go long, right? Again, we expected shorts. Why? Because we were in a higher time frame area around the 30%. We were expecting shorts to occur. So you should just be looking for short entries this whole entire way, especially once that breaks from 175.25 down here to 118.75. We should have just been looking for what? We should have just been looking for shorts. Still no structure in here. So what does that mean? What does that mean for us? Similar, I mentioned it on the previous day's video, is when we do stuff like this, price tends to do this and run itself all the way back up, okay? And a lot of the times you run that high. There's finally your first valid low. Again, where's our previous structure? I'm gonna draw that over. It should be there. Our previous zone is there, right? Our previous zone is there. So we'd expect price to at least give us up to this area, right? And we're bearish. So when it gets up to that area, what are we gonna do? What do you think you should do? Well, possibly short. Possibly short. But what needs to occur first? A valid high needs to occur first. And then once a valid high occurs, like it does right there, what do you have here? You have a valid high. So if it taps that, what are you possibly looking for out of here? Shorts. Why? Back to the bottom of what? Bottom of the range. Why do we know that this is now a range currently? And that this is going to end up being the bottom? Well, because this high, what's its job? It's to put in a new low, and we know it failed when it put in a valid low there. So we're going to expect it to trade down to the bottom of the range, and most likely the bottom of the range ends up being this last little swing, and it can even be more defined to down there. Why? Because that's your technical origin, because it's the last downswing, right, of the move up. So if I'm shorting this, would this be a good short? Remember, I start covering here. Don't worry about the pointages. Is this a valid short? Yes, because we start at a 1-to-1. Now, if I'm taking this trade, when can I move my stop up to here? Well, when we break that low. When we break that low and close, I can move my stop. Okay, sweet. Now I can move my stop where? I can move my stop here. So if this decides to hit my take profit, which would be right at the top of the zone, possibly even here, but definitely here. If it decides to hit my take profit, I hit a 2.6 RR by the time that happens. And boom, look at that. Very nice and simple, clean, very clean trade. Now, what do we know about this area? We know that this is the bottom of our range, right? We already discussed that literally a couple minutes ago. So if a valid low occurs, we would expect price to do what? Trade and trade up above this and possibly into the 70 before shorts would even be valid. Okay, why? Because it's in a range. We've already established how we enter a range. If you don't remember, go watch video 6, I believe. There's your valid low right there. If it's to tap back into it, you can take shorts. You don't get it, oh darn, you can find other entry models. Whatever your entry model says. And we should expect that to get ran. Boom, gets ran. Now, again, are we just blindly taking trades here? Are we blindly taking trades here? No, we're not blindly just taking taps. We're not blindly taking taps. That is a silly thing to do. And you can see it runs straight through that zone, and you've been cooked. Sweet. So, at this point, we have wicked out the top, but we've closed the internal range. So internally, that this is a flip, okay? So we're going to expect bullishness to continue. Why? Because if you go watch the range video, I say if this gets closed above this internal high, you're going to expect the high to get closed above as well. So this point. So even on this pullback, yes, it may look like a price expectation 2, but it's really a price expectation 1. It's really a price expectation 1 where price just does this. Okay? Because of the nature of being in a range first. Might need to rewatch that a couple times. So if it puts in a valid low, what would you be looking for? You'd be looking for longs. Boom, there's your valid. That closed below 92.25, 92. No, it didn't. Not yet. There's your valid low. Taps right back into it. Again, we'd expect it to run, and where would the next target be? Well, of course, it would be at the 70 of this zone. Why? Because it already used the 30. We'd expect price to run up to the 70 of that zone because the 30. Because it already used the 30. And there you go. Very, very, very simple trade. So we're just following structure for sure now. Why? Because we've finally broken. So that's a high. That's a low. That's a high. Did it close above? It did. So you have a low. You have a high. So again, you're still looking for what? Bullishness. You're still looking for bullishness. You're still looking for bullishness. So there's your, finally, there's a valid low that you can look to trade off of, right? If it was a trade I was looking for, where would I put this? Where would I put my stops? Well, I'd put it down here, cover the low of the unmitigated zone that we're in, right? And I need at least a 1-to-1. So 1-to-1's here. If that's the case, we would expect price to potentially run that out. Yeah. Of course, this is going to be a little bit more risky because you'd really want to just take out this high. So this is a trade that you have to decide, are you willing to take the risk here? Okay, because if it decides, hey, I don't want to go run this zone completely, and I'm looking at this area here, a lot of times it might just take out that liquidity here. See how it missed this liquidity here, just barely? So a lot of times they'll take that out, right? Because it's the last liquidity you can take. So if that's something that you're okay with, and technically we put there, it's about a 1-to-1, then that's something that you take, right? That's something that you would take. Now, when do you think you should have gotten out of this trade? I can already see. Well, we should have gotten out of this trade if I was long, because now we had flipped bearish, right? We had flipped bearish, so when price comes back up to my break even or a little bit higher, I should take this out. Why? Because we're in a bearish order flow. We're in bearish order flow. So yeah, even if price decides to run all the way up here, cool. The trade management says, okay, well now we're in bearish order flow, so now I'm going against trend. This is going to be a little bit more difficult. I still believe it takes this though. Boom, takes it, awesome. It also closes above here and puts us in bullish order flow. To me, on a higher time frame, probably like 5 minutes, these are wicks both ways, so this is probably just a range. Most likely just a range. So I'd expect this low to get ran out. Yeah, nice. Low got ran out. And there's a shift. Another shift right there. It does close by a tick, so what do we have? We have a high here. So what are we looking for? We're looking for any type of bullishness or bearishness. Now, where should we expect this to trade down into? If we're here, where should our expectations be to trade it down into? Well, definitely below this low. Why? Because it's non-structure. It's a non-structural low. It's not even, it's a completely non-structural low, right? So that means we have this zone. I'm actually going to clean up a bunch of this stuff for you guys. We have this previous zone, right? Completely unmitigated. We know that this is non-structure. We know that the first tap typically comes around where? Typically comes around that 30% mark, right? So is that above our 30%? Yes. So if I'm looking for shorts, because remember we are in bearish order flow because we broke here. If I'm looking for shorts, my initial target should be there. Why? It's non-structure. And why is it non-structure? Because this area didn't close the protected high. So price does what? Does exactly that and gives us a trade from here all the way down to below those lows and taps literally right by that 30%. So now that you're here in your unmitigated zone, right? Yes, we're in bearish order flow, right? We do have structure right here. There is structure right here. A low and a high, okay? So if we close that, we definitely know we flipped back bullish. So we're not just blindly longing here at this area. Now, back test and know what you're going to get, what you should expect. But for sure, if it breaks this, then that is just a fake flip. Why would it be a fake flip? It's a fake flip into a completely unmitigated zone. I don't know how many times I got to say that. Completely unmitigated zones are going to get are the ones that fake flips occur into. Almost every single time. Enter a little bit of a range, and we break it. Congrats. So now what are we? We're bullish. We're literally back bullish, just like that. So we have a low there. We have a high form there. So all we need is price to do what? Put in a valid low, and then you can look for longs, right? But where would the targets be, right? Where would the targets be? Well, probably in this completely unmitigated zone, right? It's probably not going to be just run straight through completely unmitigated zones. So there's a valid low occurs there. Taps right back in, right? Where's our target? Probably 50% of that zone. Boom. There you go. Congrats. Now we do have structure here and structure there and structure here and structure there, structure here. We're in a completely unmitigated zone, the origin of it, so we'd expect reactions here. Again, this was our previous zone. There. Put it there. And we have high there, a low that's trying to put in a high there, and we fail. Nope, not yet. There's no close. And we fail, right? We fail. So we know that that low is going to get smoked. Most of the times, the one that brought the initial high gets smoked as well. Why would that be the case? Because again, we're going back into a completely unmitigated zone. So this is just a higher time frame range. It's just a higher time frame range. When it does stuff like this, you know it's a higher time frame range. So you know that most likely, not guaranteed, but most likely, it's going to trade back into minimum this wick. Why? Because this gets ran, and this is an unmitigated zone on a smaller time frame. And it runs it. Look at that. It runs it, and that's okay. But now it's tapping exactly 50% of an unmitigated zone. So what should we expect here? We should expect a 1-to-1 at least to occur, which 100% occurs. 100% occurs. Again, it's just a higher time frame range. And if I need to go up to 5 minutes so you can see this, it's just a higher time frame range. See, we have a low, we have a high, sorry, we have a high, we have a low. The job of this low is to do what? Put in a new high. When does it fail? It fails right here, right? Because there's a closure there. So then we know it's a range, so we know it's going to trade up to the top of the range, back down to the bottom of the range, which ends up being this wick, right? Ends up being this wick, and then it trades back up to the top of the range, and then possibly back down to the bottom of the range until it does what? Until it breaks out. So we're going to just play this like a higher time frame range. Top of the range, back down to the bottom of the range, back up to the top of the range, right? And we do have structure in here on this lower time frame, right? We do have structure because we have a high, and we had a low, and then we had a break, and then we have a no high here. Why? Because it didn't close below this wick. So now this is just a lower time frame range. If you didn't catch the higher one, here's your lower one. How simple is that? Simple, simple, simple. Very simple. And then what happens? Well, price decides that it wants to run and take out this high, right? Remember, the protected high is this wick. So it closes. So now what do you have? You have a brand new zone. And then you just start tracking from there. Again, it all comes back to the basics. There's nothing revolutionary about what I'm doing. Literally nothing. Nothing revolutionary at all. Just tracking structure, day in, day out, identifying unmitigated zones. Again, it comes back down to the 50, or it looks like it tried 30 first here, failed to put in a new high, so it probably trades down a little bit lower into the 70. If you need to see that, here you go. Just missed the 30, but that's the same area. That's where your SNDR is. Remember, the 30-70 are just the ideal. It's not the exact, okay? It's the idea of where the SNDR and origin is. So you'd expect this to be used to put in, what? A new high. Enters range stage first, but look at that. Congrats. You win. You win again. It's that simple. So slow yourself down. Track your structure. Track your unmitigated zones. Make sure every trade you take is ideal. It's not these, oh, I'm going to go for 5 points, but I have to have a 55-point stop loss. Okay? Be smart. Be patient. You got it. All right. I'll see you guys in the next video.